Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SANY INT'L interim report. SANY Heavy Equipment International Holdings Company Limited offers a diverse range of businesses and services across various industries. The company's main offerings include manufacturing and sales of mining equipment, such as coal and non-coal mining machinery, products, logistics equipment, including intelligent excavators and unmanned vehicles, oil and gas equipment, including drilling, workover, and automated pipe handling equipment, emerging industry equipment, including hydrogen production and storage facilities, spare parts and related services for various industries, property development, services, automation equipment, monocrystalline silicon materials, Li-ion battery, manufacturing equipment, and solar modules, drilling and oil field technical services. The company operates globally, with a presence in mainland China, Asia, Europe, the United States, Brazil, Africa, and internationally. The significant increase in SANY INT'L stock price by approximately 68.66% over the past year can be attributed to several key factors. The company's strong financial performance, particularly in Q3 2024, with a 96.49% year-on-year growth in net profit and a 19.4% year-on-year increase in operating revenue, set a positive tone for investors. The full year 2024 results showed sales and revenue up 6.22% year-on-year, with net profit attributed to shareholders surging by 31.98%. Additionally, the company's robust CONE 2025 financial performance, with revenue increasing by 14.6% and net profit rising by 30.6%, further boosted investor confidence. The company's strategic focus on globalization, digitalization, and decarbonization has also driven innovation and market expansion. Investments in research and development have led to the launch of numerous new energy products, enhancing the company's competitive edge and long-term growth prospects. The improvement in overseas revenue, particularly in the Asia-Pacific region and Africa, has further contributed to the stock price increase. Overall, SANY INT'L's strong financial performance and strategic advancements have driven its significant stock price growth over the past year. The primary drivers of revenue growth for the company are multifaceted and can be categorized into several key areas. Firstly, the company's globalization efforts and digital intelligence technology leadership have enabled it to expand its customer base and increase sales in emerging markets. Additionally, ongoing R&D in new products and technologies has led to increased revenue from innovative offerings. The expansion of electric and low-carbon product offerings has also contributed significantly to revenue growth, as has the emergence of new industries such as hydrogen energy. Furthermore, the company's strategic acquisitions, including the acquisition of lithium business, have provided a boost to revenue. In terms of specific numbers, the emerging mining industry equipment segment saw the largest increase in revenue, growing by 25.4% from RMB 3,621,061 to RMB 4,565,867. Revenue from mainland China increased by 117.5%, and sales of industrial products grew by $4.66 billion year-over-year. On the other hand, the primary drivers of revenue decline are largely related to specific business transactions or events. The disposal of subsidiaries resulted in a loss of RMB 16,752,000 for the year ended 31 December 2024. Additionally, sales to certain customers decreased significantly, including Hunan SANY Medium Lifting Machinery Co. Ltd., Hunan SANY Zhangyi Machinery Co. Ltd., and Chenzhou Zhongren Machinery Manufacturing Co. Ltd. Overall, the company's revenue growth is driven by a combination of strategic initiatives, innovative offerings, and market expansion, while revenue decline is largely related to specific business transactions or events. Net income experienced significant fluctuations, with a year-on-year increase of 276.2%. However, the rate of growth varied across different periods, with increases of 31.1%, 61.2%, and 25.3% in other instances. In contrast, profit margins showed mixed results, with gross profit margin decreasing by 0.7 percentage points to 23.7%, while profit margin before tax increased by approximately 3.3 percentage points to 14%. These changes suggest that the company's profitability improved overall, but was accompanied by a slight decline in its ability to maintain high margins on sales. Based on the provided financial summary, it is clear that the company is indeed generating positive operating cash flow. This is supported by two separate references, page 12 and page 33, which both confirm this trend. Specifically, the net cash from operating activities for the 6 months ended June 30, 2025, was RMB 2,311,119, further solidifying the company's ability to generate positive operating cash flow. The company's debt level has experienced significant changes in recent years. Total liabilities increased by 9.3% from RMB 28,752.5 million to RMB 31,128.4 million, indicating a notable rise in debt. However, net debt as a percentage of equity plus net debt remained relatively stable at 63.2% to 63.5%. Bank balances and trade payables have also increased, while the amount due to fellow subsidiaries has risen substantially. In terms of interest expenses, finance costs have increased by approximately 7.7% to RMB 122 million. Interest-bearing bank and other borrowings have grown by 10.1%, leading to a 13.3% increase in interest on these borrowings. These changes suggest that the company's debt level and interest expenses have indeed changed significantly, with an overall rise in debt and corresponding increases in interest expenses. The company's financial performance was mixed across various segments and regions. Notably, overseas sales revenue saw a significant increase of approximately 5.4% to RMB 4,018.9 million. The emerging industry segment also performed well, with revenue exceeding $11 million. In contrast, the mining equipment segment struggled, reporting a loss of $254,617. The oil and gas industry segment also underperformed, with revenue decreasing from previous periods. The company has a history of paying dividends. In recent years, it distributed 348,249 RMB in 2025 and 217,553 RMB in 2024. This confirms its commitment to returning value to shareholders through dividend payments. That concludes the financial summary for SANY Int'L. Feel free to comment below, and I will be happy to answer them when possible.